Hello everybody, and once again welcome to Synonomics, the money machine. I would like to thank you all for your lovely support for my previous video. Is Rivian the next Tesla? Catch 'em young. And thank you all for sharing your views on Rivian. At the same time, many of you have also shared that you have caught Rivian young at a much lower price point, $8, $11 like that. And so congratulations guys, you guys are sitting on a fat profit right now. Well, the important point to note is that since the last video was out, Rivian has gained its traction. Basically, many of the analysts are actually increasing the price target for that. Bernstein have actually put the price target of 30. Yes, you heard that right. 30. Morgan Stanley has now the price target of 24. Many analysts who are not considering Rivian as one of the EV player, I would say, and they only used to think that Tesla is dominating the market. Now they have started looking into Rivian and putting a price target, included that for the analysis. Well, so today we are going to discuss, hey, what is Rivian doing right? We all know that the financials are not looking great, it's still pretty much in the loss, etc., which I covered earlier. I'll cover again today. But what is Rivian doing right, guys? So right now, Rivian has become pretty much the second EV player after Tesla. Everybody is talking about it. But before we get into that, let's look at some fun facts. When Rivian was formed, I would call that as a company, the name was Mainstream Motors in 2009. Yes, you heard that right, Mainstream Motor. And that was coming from R.J. Scrinch, the CEO's dad's business, which was called Mainstream. Well, good that they decided to change that, because Mainstream Motors doesn't look that great, frankly. Yeah. So they decided to change that to Avera Automotives. Avera. Avera. But hey, that was pretty much in line with Hyundai's Azera. Azera. And guess what? These guys got the notice from Hyundai to change their name or they will be sued. And they changed the name finally to Rivian, which is basically the name of an Indian river in Florida, where the CEO, R.J. Scrinch, has spent most of his childhood. So that was the funny story. I shouldn't say funny, but interesting story, by the way, from where the name came, Rivian. Well, as I mentioned, today we'll look into what is Rivian doing right, guys. But before go to that, I was thinking about it that it has bagged 17% sale of its stake with Amazon. So let's think about it. Why did Amazon invested in a company who yet had to produce its first truck, pickup? Well, I thought a little bit about that, and the first thing that came to my mind was, hey, Tesla was not ready to produce the Cybertruck by that time. So their Cybertruck is going to hit the road this year, 2023 end, and also pretty much in the 2024, whereas Rivian has been shipping almost 16,000 of them already. So Amazon thought that this was pretty much in line with their commitment for zero carbon emission in 2040. Yes, you heard that right. Amazon has a commitment that they will achieve zero carbon emission by 2040. And Rivian pickup trucks or delivery trucks in this case is going to help them big time. Number two, Rivian was trading much lower. The price point was lower and the total market cap was around 17.5 billion. So buying 17% of that stake is something like $3 billion was the cheapest option available at that time. And as I mentioned, other than Tesla, Rivian was the only company at that time. So I think Amazon did a smart move by investing 17% in Rivian. Because guess what? Just now, Rivian and Amazon have jointly announced that Rivian has delivered 300 delivery trucks to Germany. So it's kind of early push for Europe, which is the great thing for Rivian to do. In fact, Rivian has just beaten the market expectation of revenue as well as the delivery in the Q1 2023. So this shows that Rivian has been scaling up the production, guys. Having said that, they're going to set up a second factory, second assembly line in Georgia, and which will little bit bring Rivian into slightly deeper loss, I would call it, because right now their fixed cost is quite high because they already have large capacity than what they are producing today. The good news is that they have reaffirmed that their 50,000 vehicles target by the end of 2023 is intact. Well, let's look at that a little bit deeper. And also, if you look at that, Rivian has just joined NACS, North America Charging Stations, or nowadays it has become North America Charging Standards, guys. These are nothing, but these are 12,000 charging stations of Tesla, by the way. So by doing that, actually, they are a little bit heading towards the cost savings. Instead of setting up their own charging stations, they're leveraging. Of course, they have to pay a fee, which is a positive for Tesla, but for Rivian, they have a little bit postponed or deferred their decision to build the charging stations. So I personally feel it is a smart move. Recently, they also acquired a company called ABRP, a Better Route Planner. Yes, you heard that right. A Better Route Planner. This is an app which tells the Rivian driver where they are and where is the next charging station. Also, as I mentioned in details, it's ramping up the scale of production, which is very good. And some other things it's doing right is, number one is the model, delivery model. They're going direct. So they're not going by the dealership model, they're going direct. So that way they'll be saving some of the cost as well, which would have been used up in the dealership model. Yeah. At the same time, they are actually building a SaaS kind of a system to take advantage of their R1 series learnings so that they can correct that into R2 series. They are also very much bullish. They have just launched the mobile service, which is called Adventure. So there's a new model to service their cars called mobile service has been launched. As I mentioned, it's Adventure. That's another good thing, guys. So a lot of things actually Rivian has been doing to come up to speed. I would say that. But hey, let's look at a little bit of financials. Financials are not looking good, by the way. Because Rivian is pretty much in the loss, we cannot compare that with Tesla, which is right now in profit. Yes, the price earning ratio of Tesla is at 58 right now at the current price. Whereas Rivian, I think we cannot give them any multiple because it's in loss. As I mentioned earlier, Rivian has just reported in the first quarter 661 million revenue with $1.35 billion loss. So its earning per share is negative $1.25 right now. If you look at the price to sales ratio, which could be a good comparison by the way. So Tesla is pretty much at 8.4, roughly 8 to 8.4. Whereas Rivian, with its market cap of $25 billion, is right now at 13 price to sales. So it's quite expensive as compared to Tesla from the price to sales ratio perspective. No profit, so you cannot have price earning ratio. You cannot have earning per share right now. So that's the only multiple we can compare, right? So price earning ratio, as I mentioned, for Tesla is 58 and its earning per share is roughly $1. Not great, but Tesla is a little bit moving into that. It's actually positive from the profit perspective, which is a plus. Well, let's look at the risks factor. There are a lot of good things Rivian has been doing from the business perspective, from the operation perspective, but there are the challenges. What are the risk factor here? Guys, there has been rumor that Rivian may go under. Yes, you heard that right. It may be bankrupt. There have been many car companies, automobile companies who have gone bankrupt because this is a heavy capital intensive industry. But hey, I personally feel that may not be true, because when I look at their financials, right now their market cap is $25 billion. As I mentioned earlier, they're sitting on $12 billion cash. And 17% of the stock is held by Amazon, who invested something like $3 billion at that time. And right now, the valuation is pretty much $4.6 billion, 4.6 to $5 billion. So if you take that out from the market cap, so 25, take away 12, take away another 4.6 or 5. So it's already 8 billion. And now 13% of the stock has been shorted. And as the price is going up, it has moved from $11 to $25 right now. And as I said, 45% price increase in 5 trading days, guys. This has really given a big squeeze to all these shorts, which is 13% of the total shares issued. It's a huge amount. So many of those short sellers are trying to close their position, and that they will require something like 2 billion. So you take away 2 billion as well. So basically what is left? Yeah, it's only $6 to $7 billion. So if you take all these out, it's actually trading in the market cap of $6 billion. Technically, you can say that. And from that perspective, even though it's incurring big loss right now, the company is not looking that vulnerable, guys. And my guess is before the R2 launch, they might raise fund. And I don't think they will have any problem raising the fund if they're able to deliver 50,000 vehicles by the end of 2023. Because that will be pretty much a certification that these guys are going to stay. They have the capacity to be an EV player and compete with Tesla. So, other than R1T, which is their pickup, and R1S, which is their SUV, they are planning R2 series, R2S, I think, in 2025. And as I mentioned earlier, the CEO, RJ Scringe, is very bullish about it. In fact, in one of the interviews, he mentioned that he is not thinking of reducing the price point of R1 series, R1T for an example. Right now, the price point is a little bit higher, almost $76,000 US, as compared to Tesla's price point or entry point of 40,000. Having said that, the 40,000 for Cybertruck is for one motor. For the two motor dual motor, it will be around 60,000. Still pretty cheaper as compared to 76,000 dual motor R1T. So well, that's a little bit play negatively for Rivian once these Cybertrucks are out. But the CEO, Scringe, has actually said that before R2, they are not thinking of reducing the price point. What does that mean? That means that in R2, they are going to bring the price point much lower. So well, if you look at the total cars sold today in the world, yes, it's around 90 million. 90 million. And as the economy will pick up, you can easily take that as 100 million. But hey, let's look at the official figure of 90 million. And Tesla wants to own 20% of that. So Tesla wants to have that 20% market share by 2030. That's what its goal is, which I think is possible, guys. Because as the penetration of the electric vehicle is increasing, of course, Tesla is the choice. If you remember last time I did share that Tesla owns 60.4% market share in US. And the next one is again Hyundai and Kia at 6.9%. Guys, from 60.4 to 6.9. So clearly Tesla is the market leader. And as Jeffrey Moore, the guy who actually came out with a lot of technology adoption theories, crossing the chasm, inside the tornado, all of these, he thinks that some of these technologies which are in the forefront, like Tesla for an example, are called the gorillas. So for an example, in the chip market, Intel used to be the gorilla in the CPU space. Right now in the GPU space, graphic processing unit space, NVIDIA is the gorilla. And the other guys who are catching up with that, like AMD or even Intel right now, especially for the GPU, they are behind. The market leader, the guy who will set the market, set the price point, set the tone of the market, are the gorillas. So Tesla is the gorilla in the EV space. And as I mentioned, I'm totally discounting whatever is happening in the electric vehicle space by the local manufacturers in China. So if Tesla is able to gain 20% market share by 2030, Rivian may be able to grab some more market share in the pickup space and the SUV space. So even though they bring the price point to around $50,000, which makes reasonable sense, by the way, because by that time the market will be a little bit matured. And if they're able to produce something like 2 million vehicles, then the market cap will be pretty much at 100 billion. Yes, you heard that right. 4x from here, 4 times. And even if they do that, half of that, guys, it will be double. So there is a possibility that Rivian may double or be 4 times the current price point in the next 5 to 6 years. And Rivian has already announced that their long-term gross margin target is 25%. Well, so things are not looking as bad as it sounded or felt when they announced $1.35 billion loss. Let me know how many of you think that Rivian is a good buy. We need to catch Rivian young so that we can do multi-baggers, or we can actually multiply our investment to 4x by 2030. If you like this kind of content, Please don't forget to like, share and subscribe. Remember, Sinhanomics is out there to create financial awareness so that you can analyze the companies, make your own decision and make money. With that, I'll just like to say goodbye to you, and I'll bring similar interesting updates for you going forward. Till then, it's a bye. Bye-bye.